Good morning, hello and welcome to Money Controls live stream. You're watching Opening Bell with me, Lovisha Darad. Well, it's a brand new day. After yesterday's sell-off, today GIFT Nifty and even the pre-open rates are pointing out to a subdued start once again. 24,000, that is the crucial level that we need to watch out for for Nifty in today's trading session. Experts have been saying that after the 24,000 breach, 23,500 is the new support levels, and if it manages to maintain above that 24,000, the resistance is placed at 24,200, provided that the index sustains that 24,000 mark as well. We have had a mixed global handover. US markets finished lower overnight. This morning, Asia Pacific markets, they also started mixed as investors brace for presidential elections in the US, as well as we have the Federal Reserve's rate outcome later in the week. So far, a tight battle has been seen between Harris and Trump. It has been suggested by majority of the polls. The voting will be getting started after market hours from 4:30 p.m. today onwards in Indian Standard Time. So let's see how that pans out. But moving on, we have lots of things lined up in the show. We have our technical expert that will be joining in, and we'll be taking your stock related queries. So keep posting them in our live feed, and we will be taking them by 9:30 a.m. So before that, let's take a look at the top headlines this hour. The United States heads for a high-stakes presidential election later today. Polls show Kamala Harris and Donald Trump are in for a neck-to-neck race to the White House. Stocks closed lower in the Wall Street overnight ahead of presidential elections, while Treasury yields too decline. The street will also be watching out for the Federal Reserve's policy decision later this week. Asian markets trade mixed this morning following a weak handover from Wall Street. The GIFT Nifty is also suggesting a lower start for the Indian markets. Crude prices surged nearly 3%, with Brent rising to $78 per barrel as OPEC delays planned output hikes. The Chinese People's Congress is also expected to announce stimulus measures later this week. Now, yesterday we saw a broad-based sell-off in the markets. Nifty and Sensex, both of them clocked biggest single-day losses in over a month. So, with this sell-off, Nifty is down about 9% from record highs. So, lots of things not working well for the market sentiment. Even the pre-open rates point out that we are headed for a lower start. If you look at the pre-open rates, we can see 0.3% cut for the Sensex. And Nifty also is pointing at a subdued start. We can see about 0.3% cut for the Nifty 50 index as well. So locally, it is the disappointing India Inc. September quarter earnings. Globally, if you look at the global front, a lot of factors are lined up. Like we discussed, the US presidential elections, markets have been predicting that a Trump win would mean that the US Fed might go tougher on interest rates. Now, a tougher stance on interest rates, that would eventually not be beneficial for markets at higher rates, would keep dollar and yields on a strong foot. On the other hand, Harris win would mean continuity of policies, so nothing much that might rattle the markets. Later in the week, we also have the FOMC outcome. Consensus lies that the Fed is expected to cut rates by 25 basis points, but we'll see what the remainder of the year looks like for the Federal Reserve as well. We have announcements waiting from the China on the stimulus measures. So all in all, a lot of things stored for the markets, and volatility that is expected to remain high throughout this week as well. Yesterday also we saw that India VIX that hit about a 3-month high. Now let's take a look to the option cues. We are seeing that Nifty put call ratio falling to 0.85 levels from 1.07 levels. Now this signals that bearish positions have been firming up in the market. Moving on, if we take a look at the F&O ban list, nothing really moving. No additions, retentions or removals were done in the F&O ban list. The next up is the fund flows data on your screen. FIs continued to be net sellers in the previous session, selling to the tune of 4,330 crore rupees in the cash markets. DIIs, that however turned out to be the net buyers, and they bought equities worth 2,936 crore rupees in the cash markets. Now, let's see how this pans out and whether or not FIIs would remain in the sell mode in this month as well, after having been on sell mode in the last month as well. Now, just a couple of minutes before we hit the opening bell. But on that note, let's quickly get on board with our technical expert of the show, Osho Krishan of Angel One. Osho, good morning. So good to have you on the show.
Good morning, Lovisha, and thank you for having me at the show.
Okay, Osho, Nifty has breached below that 24,000 levels. So how much of a downside are we expecting from here on and this week?
Overall on technical front, we were witnessing a kind of a consolidation in Nifty from the last 6 to 7 trading session. But in the last session, we have seen that there has been a major breakdown in Nifty on the daily time frame. So from here onwards, if there will be a continuation on the downside, then we can see approximately 23,500 followed by 23,450, which is approximately the 200-day SMA on the daily time frame. So this is a consolidation breakout, although the technical and derivative data are at a very oversold territory. And as you have mentioned at the early phase of the show, that we already have corrected 9% from the peak. So from here onwards, again, 3% or 2.5% kind of a correction can see some kind of intensified sell-off from in the broader market. So I'm expecting that from here onwards, there can be 1 to 2 days of a higher volatility, as India VIX has also head towards the zone of 17, which is quite higher levels as of now. So I'm expecting that in the coming 2 to 3 days, there can be some kind of volatility and uncertainty that can gauge in the market. But once we reach the zone of 23,500, then from there onwards, we can see a decent reversal kind of a scenario from in the future going on. So for the short term perspective, yes, 400 points of kind of a correction can be seen, but on a longer period, these kind of corrections should be implied healthy for long-term investor.
Okay, healthy for long-term investors, but we can see 400 points correction. So at this point, Osho, what do you recommend investors should do? Should they hold on to their cash positions?
You see, overall, it's not that every fall one should try to gauge as a bottom fishing. One should try to avoid bottom fishing for the time being until we see a kind of a consolidation and a reversal. Then only one should try to accumulate good, fundamentally sound companies from investment perspective. For now, there can be 1 2 days of uncertainty. One should stay sidelines and wait for the market to have a consolidation, to enter into a consolidation phase, and can then look for opportunities for buying stocks from medium to long term time frame.
Okay, all right. Selective stock picking that can happen later in the day. Osho, yesterday Nifty PSU Bank that showed a sharp recovery, though it closed about the flat line. But what do you expect on the charts for the Nifty PSU Bank index? We also have the SBI numbers which is coming out this week.
Overall, only the PSU banks are something that has been providing a positive instance to the market. So I'm expecting that from here onwards, there can be selective stocks that can see a decent up move. For example, SBI have seen a very decent up move. So I'm expecting that from here onwards, companies like SBI, Federal Bank, CUB, Bank Baroda, that means one should be very much selective on the technical front for these counters for entry and exit levels. But majority of the PSU counters are still looking positive, and one should try to gauge momentum in these stocks for short-term traders' point of view. There can be a decent movement that can be seen in the PSU banks in the coming 1 to 2 trading sessions. So I'm expecting stocks like SBI, Federal Bank, and CUB to perform market in a decent manner.
Okay, SBI and Federal Bank, that will be we'll be watching out. But Osho, let's look at Nifty Metal Index. What does it look like? Because after the China stimulus measures were announced, metal stocks were buzzing in trade. So right now, this week, we could be seeing additional stimulus measures which is being announced by China officials as well. So any bullish positions which is firming up?
Overall, the metal space have seen a decent kind of a bottoming out in the near phase. Majority of the
Yeah.
companies like Tata Steel have seen a very decent base formation around the lower levels of 200-day SMA. So one should again be selective in metal space also. But from a longer term perspective, yes, many counters have given a very strong breakout. For example, JSW Steel has given a very strong breakout and again is retesting the breakout zone. So one should stay selective with the with the stock picking, and some of the companies like Tata Steel, JSW Steel, Hindalco, all these companies are looking quite positive, but again, one should not go with full potential. One should stay stuck with the staggered manner of accumulating these counters from short to medium term time frame.
All right. What picks did you mention for Nifty from the metal index?
From metal, Tata Steel, JSW, and Hindalco, these three are looking very positive.
Okay, JSW Steel, Hindalco, all of them looking very positive at this point of time. So just a few seconds before we hit the opening bell, less than 2 seconds. All right, the first trades will be popping on your screen. We are expecting a lower start for the Indian markets. Like I mentioned earlier, pre-open rates were also pointing out to a lower start. So yes, first rates, Nifty Bank down about 0.2%. But yes, let's look at what the benchmarks are telling us. Sensex down about 150 points, 0.1% cut for the Sensex. Nifty down about 46 points, again 0.1% cut for the Nifty 50. So a flat opening for the Nifty. We'll see whether or not the sell-off intensifies during in just like 2-3 minutes as well, because yesterday also we saw that the sell-off had intensified just after the open. India Wix, that is something that we need to watch out. Today also it is, yesterday we noticed that it has spiked up to 3-month high. Today also it is up about 11%. So it is trading about that 18 odd levels. If we look at some of the sectoral movers, we can see that only Nifty Metal is holding strong right now at this point of time, and PSU Bank, like yesterday, it is extending its gain. Yesterday it closed about flat, today it's up about 0.2%. Other than that, we have Nifty Media Index, which is down about 0.5%. Other than that, FMCG Index, that is down about 0.1%. Nifty Auto Index, after the auto companies reported their October sales figures, they are down about 0.3%. Nifty Realty Index, that is the worst sectoral performer at this point of time, down about 1% in today's trading session. If you look at some of the gainers on the Nifty 50 list, we have the likes of Hindalco, JSW Steel, Tata Steel doing well on the Nifty 50 pack. So most of the metal counters, they are buzzing on the trade, maybe on the announcement of that the China is going to roll out some of the new stimulus measures. So in anticipation of that. Other than that, we have HCL Tech and Nestle also dominating the Nifty 50 pack top 5 leaders. If you look at the top laggards on the Nifty 50, we have the likes of Coal India, Reliance, Trent, Titan and Bharat Electronics. Titan is also expected to report its September quarter results in today's day. Apart from that, Trent, it is also expected to report its September quarter results later in the week. So let's just take some stocks in focus. We have Dr. Reddy's lab that will come out with its Q2 numbers today. Well, Money Control is expecting that profit is expected to see a drop of about 6% year on year, while revenue might grow by 12% year on year. Now, the majority of the hit on the bottom line is expected to be operational one, as expected, as EBITDA margin is likely to see a sharp fall of 400 basis points. But Osho, Dr. Reddy's on the charts. Past 3 months, it hasn't done well. So, can we expect an extension of this bearish trend for Dr. Reddy's?
See, for Dr. Reddy, the broader term time frame still is on a very positive trajectory. From a broader term time frame on weekly and monthly chart, it is in the cycle of higher highs. But as you mentioned, in the last 3 months, this counter has not done much and has seen a kind of a correction from the higher levels. Currently, it is at a 200-day EMA on the daily time frame, and after the result, I am expecting that this is a very pivotal zone. If it will sustain around the zone of 1250 and above, then from here onwards in the coming future, we can see a gradual up move in the coming period. But if there will be a downfall below 1250, then we can see a continuation in the downtrend. So today it will be very crucial day to watch out for this counter. And again, I am observing that in the last 4 to 5 trading session, the counter has been into a strong consolidation after the recent correction. So this today can be a decisive day for this counter to have anticipated future trend lines. So I'm expecting that on the breakout above 1280, this counter can see a decent up move towards 1340 to 1350, while any breakdown below 1250 on a closing basis can again slip it towards the zone of 1160 to 80 in short term time frame.
All right. Dr. Reddy's 1280 levels that we need to watch out for Dr. Reddy's. Another stock in focus is Raymond. Today also it is up about 4%. It came out with its September quarter results. We can see that the net profit slipped 63% year on year, but total income that jumped over twofold on a Y-on-Y basis in Q2. Osho, Raymond, how does it look like on the charts? We saw the demerger of its lifestyle business this year too. But for the near term, how does the stock hold?
See, overall, this counter is at a very decent phase as of now. I can say it is into a time-wise corrective phase for the time being. But on a longer term duration, it is on the verge of giving a sloping trend line breakout, which comes around the zone of approximately 1820 odd levels. So once we witness a breakout above 1820, then we can see a continuation of the uptrend. Else, the counter can stay sidelines with strong consolidation from the zone of 1640 towards 1820. So this is the immediate zone for this counter. Any breakthrough above 1820 can give a very strong up move in this counter towards the zone of 2080 for short term or immediate term time frame.
All right, 2000 that we need to watch out for Raymond India. Another stock in focus is Bata India. It's not doing well in today's trading session, but it came out with its Q2 numbers yesterday, wherein we saw that the net profit jumped about 53% year on year, while revenue rose modestly by 2% year on year. Today, Citi has come out with its report giving out a sell call on Bata India, saying that they find the current valuations inexpensive. And the profitability is also subdued with EBITDA declining. They find that the revenue growth is quite muted in early festival despite multiple initiatives taken by the management. Osho, the stock has been a total underperformer this year. What do we expect for after the Q2 results for Bata India?
See, overall, as you have mentioned, this counter has been underperforming the whole year. It is currently hovering near the 52 weeks low. So I'm expecting that any breakdown below 1290 can again witness a continuation in the downtrend. So this is a very crucial zone. 1290 is a very crucial zone. Any breakdown can lead to a further correction. While on the higher end, from here onwards, it's better to avoid this counter. But if someone is already holding it, then only to hold this counter for a higher target of nearly 1420 to 1450 for short-term perspective, keeping a strict stop loss of 1290 for short-term traders, because this is a level where one should try to avoid such counters which is not performing while the other counters or the whole broader market is having a very blast in the financial year or the calendar year. So better to avoid such counters. Once we witness a decisive trend reversal, then only one can try to look for this counter for investment in short to medium term time frame.
All right, that is the view coming in for Bata India. Let's straight dive into our viewer queries. They are waiting in anticipation. So the first query that is coming in from Satya, he's asking please ask 1 year chart for NALCO for entry and the levels to enter at this point of time. NALCO 1%, 1 month if we look at for NALCO charts, Osho, it has done well. It has given about 8% returns. What can we expect from here on?
See, overall, this counter is in a very positive bull trend. It is hovering in a cycle of higher highs, higher lows, and maintaining its higher lows in a very drastic manner. So currently also, this counter is having a very strong support near the zone of 210. While on the higher end, I am expecting it is near to the higher levels of near to the higher spectrum of the resistance. But if there will be any continuation above the zone of 238, to be very precise, then we can see continuation on the higher end. So 210 to 238 is the immediate range for this counter. Any breakthrough can give a very decisive movement in the coming future. Overall, for short or medium term time frame, one should definitely stay invested in this counter. A move beyond 238 can give a very strong boost for the higher targets near to 256 to 260 odd levels.
All right, very strong commentary coming in for NALCO. Another view coming in for Naveen is that the view on Torrent Power. Osho, Torrent Power, if we look at, 1 month after, last month it hit a 52-week high. So what can we expect for the near term, Torrent Power for you?
See, again, Torrent Power is in a very strong cycle of higher highs, higher lows, but in the recent period, this counter has seen a decisive correction from the zone of 2000, nearly heading towards the zone of 1750 odd levels. So overall, the rising channel has been broken down, but the broader structure remains positive for this counter. I am expecting that post the result there can be a decisive trend movement that can be seen. But for short term traders, it is advisable because this counter is having a very strong support around the zone of 1680, 1690 odd level. So that is a very strong support for medium term investors. If there will be any further correction towards the zone of 1680 or 60 levels, then one should try to accumulate further in this counter. Overall, the trajectory is very positive from medium to long term perspective. So one should try to gauge momentum if there will be any correction in this counter.
All right. So strong outlook from the medium to long term for the stock. Another view query coming in is on the view on BEML. BEML, last month also it has given good returns, about 14% returns. What can we expect for this defense play, Osho?
See, overall, this counter have seen a very decent price correction from the highs of approximately 5,400. And in the last 2 months, approximately, the stock has even set a very strong support base near the zone of approximately 3,500 to 4,000 kind of a range. So I'm expecting that in the coming period, this counter can see a very strong upsurge. Again, can retouch the zone of 5,400 in the short to medium term time frame. One should definitely stay invested in this counter. We are witnessing a very strong base formation, and once the momentum returns back in this counter, we can see a drastic upsurge from medium term time frame.
All right. Again, strong commentary coming in from BEML. We have Titan that is also reporting its Q2 numbers today. Money Control's poll suggests that the Titan's revenue is expected to drop about 14.4% year on year, while profit may see a modest 9% uptick on a Y-on-Y basis. So Titan on the charts, Osho, what does it look like? Because it has not been a good performer this year. So what does the near term hold?
See, overall, this counter is in a very broader range kind of a consolidation, approximately 3,100 on the lower end and 3,800 on the higher end for this counter. But I'm expecting that as this counter is at a lower band of the support zone, there can be some kind of consolidation can be seen. But again, after today's session, once the earnings are out, then only we should have some outlook in this counter. But from a technical point of view, 3,100, 3,180 is the very strong support zone. So one should try to, if someone is already having, one should try to hold this position with a stop loss of the lower band of the support. While on the higher end, again, after breaching 3,800 only, one can see a decisive upsurge. So for now, 31 to 3,800 is the zone. One should try to buy around the dips and try to book profits around the highs of this counter.
All right, that is the view coming in. Another query coming in from Puneet is he's asking the view on Western Carrier India for the long term. He's been holding the shares at 132 levels since October last week. So he's asking whether he should switch to any other logistics company. Osho, Western Carriers, a recently debuted company, right? It listed at a discount, but today it's trading around that 130 odd levels, still below than what Puneet had bought, 132. What does the
See,
long-term view
overall,
look like?
the technical data won't be suffice to have a commentary on this counter because this is a newly listed company. We do not have any such data which can plot a decisive trend movement in this counter. So I would say that I won't be able to comment on Western carriers. But again, after many counters are looking very, very positive. Snowman Logistics, for example, is looking positive. There we can see a decisive upsurge from long-term perspective. So Snowman Logistics one can definitely look to accumulate at current levels because the counter have seen a decent correction around the zone of 92 and is hovering around 68, 69 odd levels, which is the 200-day near to the 200-day SMA. So I expect that this counter has a potential to retest the zone of 92 followed by 100, 102 kind of a level. So this is a counter one can try to look from the logistic space. For Western carriers, I won't be able to give a proper.
All right, okay. Snowman Logistics, that is also one of the favorable logistics company that one can look at. Let's take a look at IRCTC. It is down about 0.6%. It also came out with its September quarter results yesterday. We saw that the net profit rose very modestly by 4% year on year, while revenue climbed by 7% year on year in Q2. So a modest September quarter performance. Osho, how does IRCTC look like? Ever since that high in May, this year the stock has been languishing. What can we expect for the near term?
See, overall, this counter is into a very strong corrective phase. There has been no sign of any revival, respite, or kind of a reversal that can be seen in this counter. So I would say if someone does not hold this counter, better to stay sidelines. Once we see a trend change in this counter, which will be approximately above the trending sloping trend line, which is near about the zone of for now, is it at around 845. So that is the immediate resistance for this counter. While on the lower end, 760, 780 is a support zone. So if there will be continuation on the lower end, 780 is the zone where one should try to accumulate this counter. While on the higher end, approximately 845 to 50 is the immediate resistance, above which one can only see some kind of decent movement, not a very aggressive on this counter for the timing, but there can be a gradual up movement towards the zone of 910, 920 odd levels.
Okay, all right. We have another query coming in from Alex. He's asking the view on data patterns for fresh entry for long term. Data patterns, Osho, how does it look like on the charts? Past 3 months, it didn't do well. Past 1 week, we are seeing a bit of a buying emerging. What does the near term look like?
See, overall, this counter is at a very crucial zone because it has seen a very strong breakout around the zone of 2200, 2270 is was the zone where we have seen a kind of a breakout in this counter. And again, this counter has retested the neckline of the breakout. So this is a zone where one should try to accumulate this counter because on technical analysis, whenever there is a retestment of a breakout, that applies very positive for the longer term view of the counter. So I'm expecting the primary trend is obviously very bullish, and the recent correction from the zone of 3600 towards the zone of 2200 can be seen as an opportunity to accumulate this counter from medium to long term perspective. So this is the zone where one should try to accumulate this for a higher target of nearly 2800 on the short term perspective, and after its breach one can definitely see a higher movement in this counter, while on the lower end again 2100 should be kept as a stop loss, which is the very strong support for this counter.
Okay, 2100 as a stop loss. Osho, another query we have on IRFC. Satya is asking what are the view on IRFC? IRFC came out with its Q2 results. That was also quite moderate, and the railway play is also not doing well on the charts, be it 3 months or even so far this year. What do you suggest for the near term?
See, again, the railway counters are not having a very strong movement as of now, but IRCT is the first counter which has seen some kind of revival or respite in the last trading week. So I'm expecting that from here onwards, the lower, which is approximately 130.32, is a very strong support for this counter for the time being. While on the higher end, there can be a gradual up move that can be seen. So from here onwards, with a stop loss of 132, one can definitely try to accumulate this counter from a medium term time view, and on the higher end near about 185 to 188 should be the target for short to medium term perspective. Once it breaches the zone of 188, then we can see a further and very strong higher movement in the coming periods.
All right, 188, that is the level that we need to watch out for IRFC. But just a final question before we let you go, Osho. What are your trading picks at this point of time?
See, currently the market is not very positive, so I will basically recommend to stay very light in these kind of market scenario. But again, there are two technical picks which are very positive on the overall time frame. The first one is Mahindra and Mahindra. M&M have seen a very strong numbers also and have seen a very strong revival in the last 3 to 4 trading session. So I expect that M&M can see a very strong up move in the coming period. Approximately for short-term perspective, 2980 is the target that one can eye for in this counter, and what 2800 is the strict stop loss that one should hold in Mahindra and Mahindra. The other counter is Laurus Labs. Laurus Labs has seen a very strong breakout in the last trading week. Yesterday, the counter have seen a kind of a retestment of the breakout, but again have started moving higher. So one should definitely try to accumulate this counter, keeping a stop loss of nearly 475, and the immediate target comes around the zone of 515.
All right, M&M and Loris Labs from you. But thank you so much, Osho, for joining us, for your valuable insights and your time as well. We hope that we connect with you soon.
Thank you so much.
All right. Let's just take a quick look at the markets at this point of time. We can see that the Sensex has recovered a bit from the lows. It is down about 58 points, flat trading at 78,723 levels. Nifty has also recovered off from its day's lows and it is trading flat in the red, testing about the 24,000 levels. If you look at some of the sectors, we can see Nifty Metal that is standing well. It is up about 1% in today's trading session. India Wix that has also saw a bit of a recovery. We can see that an initial 11% spike has cooled off to 0.8 tenths of a percent. Apart from that, all of the metal players dominating the list in the Nifty 50 pack, that is your Tata Steel, JSW Steel as well as Hindalco. But all right, joining with us, our next fundamental guest for the show, we have Kranthi Bathini of WealthMills Securities. Kranthi, good morning. So good to have you on the show.
Yeah, good morning.
Kranthi, just starting with the market texture, Nifty is down about that 9% from record highs. Does it look like it will be a difficult phase for the markets and to make a significant comeback in the remainder of the year?
Yeah, yeah, markets are corrected from its peak, and almost all Nifty is down around 3,000 points from the its highs. What we can sense at this point of time is the relentless selling from the FPAs who have been the net sellers throughout the month of October, and also on Monday also there is a surprising sell-off on the markets where markets trending below the 24,000 level, which creating the tremors in the markets at this point of time. Uh, by and large, we are headed for important events across the globe: the U.S. election and the Fed rate cut, which is a consensus view of around 25 basis points. But coming to India, what we witnessed in the past first half of the year, some kind of softness in the economy, government capex has slowed down, whereas the revenues have been going up as per the budgeted allocations are concerned. But some kind of softening of the economy we witnessed in the first half. It is we if we have to look into the reasons for this, one way the markets are after making the top. So with reason or without reason, some kind of correction is needed for the market, which is important for the long term growth of the market. So some kind of consolidation is taking place at this point of time, and we have not witnessed any kind of positive earning surprises in terms of the current quarterly results are concerned. That's one drawback for the markets at this point of time. Going ahead, getting into the next second half of the uh, year, what we are going to witness is we are going to witness some kind of pickup in the capex is concerned, government spending is concerned, and also the first 6 months the general elections were there, so some kind of slowdown, and also erratic monsoons across India, that also made some kind of slowdown in terms of the earnings of the companies are concerned. So next couple of quarters are crucial for revival of growth, and also sustainability of the growth is concerned, earnings are concerned. Overall, Indian market, if you see on a medium to longer term basis, we are headed for a positive direction. So the current correction what we are witnessing in our market is healthy for the healthy, and also markets are headed for a uptrend only. The long term trend is intact. We can expect some kind of positive momentum at least in the next coming quarters going ahead. So this dip can be a warranted buy for the investors who are looking for medium to long term.
Okay, a warranted buy in right now. Kranti, yesterday's sell-off that was predominantly that came out because of the nervousness and the tight race happening in the U.S. elections. What do you make of it? How are the markets expected to react to either the Trump or Harris win?
See, right now market could able to absorb around the sell-off of foreign portfolio investors. They sold for a tune of more than lakh of crores. So market could able to absorb all this sell-off in the recent past. So at this point of time, okay, what we are seeing is 24,000 level below market trading is creating some extra pressure on the market at this point of time. So the yesterday on Monday also the foreign portfolio investors are the net sellers. At this point of time, one need to try to be on cash. Okay, look at how the things are going to emerge in the next few days. The U.S. Election and also the Fed outcome. So these are the important events, and also we have the rising geopolitical tensions that's creating one more pressure on the markets at this point of time, medium to short term. So if the investors are the extremely long term investors, they can infuse their capital in a staggered manner at this point of time. By and large, we are getting a sense at the market looking at the data right now. We seems to be bottomed out at this point of time, until unless there are any kind of geopolitical tensions that are emerged in the medium to short term that are going to create extra pressure on the market. By and large, markets are consolidating at this point of time. So investors with long term horizon, definitely they can start picking up the stocks at this point of time.
Okay. Since you mentioned that some bottom fishing and can be done from a medium to long term horizon, Kranti, where after the recent fall do you believe that the earnings are also comfortable and valuations have also blended well? Any sectors
Pardon
in
me,
focus?
your audio is very low. I'm not able to hear to your question.
Hello, Kranti, can you hear me proper?
Uh, y- yeah.
Okay, I was asking that, after the recent fall, where do you believe that the earnings and comfortable valuations they have blended well? Which sectors in focus can you see that?
Yeah, for me, the financials looks very attractive at this point of time, and also the defense stocks have been in a momentum zone, and these stocks have been the multi-baggers in the recent past from 18 to 24 months perspective. So these many of these stocks had a significant correction. These stocks are corrected from its peak around 35 to 40%. So these stocks look very attractive for a longer term basis. Even the railway stocks have also corrected nearly 20 to 30% from its peak. So on a longer term basis, okay, these are the sectors looks very attractive. The first one is the banking and financial services are concerned, and defense and railway stocks also at this point of time investors can add for a medium to longer term perspective.
Okay, all right. Financial services, that is one of the sector that we need to look out. Kranti, we are expecting some additional stimulus measures which will come out from China this week. So, like you mentioned about that, the FPI outflows, that is one of the major concerns for the market. Can we expect that it can accentuate the flows that we are seeing at this point of time?
Yeah, the foreign portfolio investors have been weighing on the this big event, but my sense is the long only money which has been stationed to enter into India, that bound to come once the next big events that take place in the next few days. But by and large, the China stimulus package and all, it is a short-term event at this point of time. But I don't think so. Foreign portfolio investors are in a hurry to jump to China at this point of time. So how the things are that are going to pan out in the next couple of days, the U.S. election and all, they are going to create. They are going to create the market pressure. But by and large, I'm sure the foreign portfolio investors are not in a hurry to build their portfolios in China immediately. So there is a dichotomy at this point of time. But the long only money, which is for India, it's bound to come back to India.
All right. Kranti, what should be investors' trading strategy at this point of time? Like we discussed, we have some geopolitical tensions, we have US elections, and we have the US Fed also coming out with its interest rate decision. So, should investors wait at this point of time, be on a wait and watch mode, or where can they accumulate stocks at this point of time?
See, for a longer term perspective, definitely the domestic fundamentals are quite strong. We have the PMI numbers, manufacturing PMI numbers, which has come very encouraging, and we have not witnessed any kind of dent in terms of our GDP growth prospects are concerned. Probably a early rate cut can boost the further the growth in the economy. Investors with a medium to long term, definitely they can start buying the chips at this point of time. But trying to be on cash is extremely crucial at this point of time. The entry levels are crucial for the stocks. By and large, it's going to be a stock specific action in the medium to short term. So if I'm an investor, first time coming into the market at this point of time, this is the point one can infuse at least 10 to 15% of their capital at this point of time, because nobody sure about where the bottom and where the top. Right now, given the kind of correction what we witnessed in the last few days, one can start investing at this point of time. By and large, one need to be in a staggered manner. They have to infuse the capital.
All right. With that, Kranthi, we have to let you go, but thank you so much for your time. We hope that we connect with you soon as well.
Thank you. Always my pleasure to share my views with you all.
Thank you. All right, let's just take a quick check of the markets. The Sensex still below that 78,650 mark. It's down about 150 points, and Nifty is also flat in the trade, 0.1% cut that we can see for Nifty 50, down about 20, below that 24,000 level, but above the 23,950 levels. If you look at some of the sectors which is doing well, Nifty Metal, as I mentioned earlier, that is propping up in trade. If you look at the broader markets are underperforming the benchmarks. Mid caps especially down about 0.3%, while small caps is down about 0.1% in today's trading session. A new Nifty emerger has come up, that is your IndusInd Bank. It is up about 1%. Recently, we saw that IndusInd Bank shares had crashed 20% after the management had indicated some stress on the asset quality in the Q2 results, as well as some additional contingency provisions were also taken. But today IndusInd Bank is lapping up in trade. It is up about 1% in today's trading session. Maruti Suzuki, another automaker, it is also doing well, up about 1% in today's trading session. If you look at some of the top losers, ITC and Shriram Finance, they have come up in the top losers list, down about 1% each. So we'll see how that pans out for the market, whether or not this sell-off intensifies and we reach for that Nifty 23,500. That is the support levels that we need to watch out for Nifty 50. But with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in for 3:30 p.m. for Closing Bell. We will be discussing about how the market has developed and what are the stocks in focus. But until then, signing off, do stay tuned to moneycontrol.com for all the news updates and market insights.